With yesterday's oil spike and the S&P 500 index drop, metals have started to fall again. Right now, another movement has begun to form that we can use for a short position. But actually, I've already done that. So in this video, I'll be sharing my developments, my vision, and the trade itself, which might be interesting to you, including for your own trading. But before we begin, I have a big favor to ask of you. I've started getting comments that you want more of these videos, more updates on gold, on metals, and on the assets that you're interested in. If that's the case, write in the comments, send me a plus sign, say you want breakdowns, whatever, so I know that these videos are valuable to you. If so, I'll keep recording, and I'll start making episodes a bit more often to satisfy all that demand. Well, let's move on to the chart. Let me tell you what we've got. At the moment, here's what's interesting to ask. This is the last post I published on March 12th. At one point, I opened a trade with clients. On silver and gold, we shorted from the breakout of the three. And I posted a similar scheme but without a specific trade in the channel. I know some of you shorted and made good money, so congratulations on that. But the movement didn't end there for us. Next, the target here was 4,680. Well, let's round to 4,700. Where did that target even come from, and why didn't we work further? This all comes from our original plan, the triangle. And if you look closely, 4,680 was exactly the target here. Where did I get that number? I took the first decline, projected 62% from point B, the end of the upward correction, and got this mark. Usually weak movements end in this area, meaning a shortened C, and the next part of the triangle finishes. In addition to that, the triangle can be calculated and monitored in the process using shift pitchforks when the price ends in the range between 38 and 62%. So for me, there was a possibility that we'd finish somewhere here, so the trade would go as smoothly as possible. For me and my clients, we just fixed the trade at one level and then decided to observe. So after we dropped all the way to 4,100, ultimately. Well, to be more precise, we first got a bounce. After our trade closed and I was pointing everyone toward the presence of a 3, if there's a 3, we short further. Well, they didn't give a 3, so we didn't make any more trades, and for the first time since then, we've seen something like a corrective formation. What did I do? Given the five-wave structure within the move and the lack of divergence, I assume another decline is possible and would be more logical. But to check this, we draw the slanted pitchforks and get essentially the equilibrium channel where the correction should be completed. And here, an interesting dilemma arose. On one hand, we've completed the 3. On the other hand, if I set up the next set of pitchforks, the momentum will be very weak for the current move, which, well, doesn't quite match what's needed to enter a trade. And looking back at last time when we were left without a position, I spent a long time deciding whether to open or wait for a more stable signal to form. I decided to enter the trade with half the risk, so instead of 1%, I took half a percent, but without a stop. I'm expecting that if the price continues to rise, it might complicate the correction, ending its move around 4,680, but it shouldn't go further, or else it'll be a signal for a full reversal. So I'm holding the position. If it goes higher, I'll manually track how the price passes that specific level. And if we consolidate above it, well, unfortunately, I'll have to close. So at most, I'll lose 1%. However, on the downside, the ratio is about 4 to 1, and the trade seems really reasonable and quite interesting to me. So, downside potential? For us, the potential targets are 3780 and 4000. So it's up to you whether to copy it, whether to even consider a trade here, but in my opinion, it's a good model, a good setup that deserves attention. And that's not all, my friend. Look, we broke the triangle. We're forming a standard five-wave move down. What does that mean? It means there's a chance that after this decline, that is the final low, we'll get a reversal. A reversal within our higher time frame chart, where actually, if you remember, I'm expecting further movement towards 6,500. And that will be the key theme, the key moment that I'll be interested in. So, if we finish wave 3, we'll start forming the next cycle, the next growth cycle, and it'll start sooner than expected, meaning before May. How will we act in this situation? Definitely, again, if there's demand, if you leave comments, I'll post the next video when there are changes. But briefly, we'll wait for a breakout from the pitchforks, consolidation, and a further move to the upside. If it forms, then we'll start switching to the upside and gradually work in that direction. If it was interesting, give it a like. Good luck to you. Bye.